So let's imagine that you earn 500,000 naira on a monthly basis. There is a legal deduction on this money, which is your tax, okay? Personal income tax. Now, how does the accountant arrive at the amount that you should pay as taxes? The first thing that your accountant does is to get your annual salary. If you earn 500,000 naira monthly, it means your annual salary is how much? 500 times 12 months, that is 6 million naira. Annual pay is what? 6 million naira. Yeah. Now the state government is so kind that they'll give you an allowance of 200,000 naira. Yeah. Your personal allowance. They're going to give you some allowance. They won't just put tax on the whole 6 million. No, no. They give you allowance, personal allowance. Yeah, 200,000 naira. So this 200,000 naira is the least they can give you. How do I mean? Sometimes it can be more than 200,000 naira. It can be more than 200,000 naira if 1% of this whole 6 million naira is higher than 200,000 naira. Do you understand? When I was doing my professional exams, that's advanced taxation, how I remembered it was Okereju, that's in Yoruba, that is the least I can get is 200,000 naira. So 1% of 6 million is 60,000 naira, right? So they give you the higher of 200,000 and 60,000 naira. Your personal allowance must not be less than 200,000 naira, and that's why I said at least Okereju 200,000 naira. The next allowance they give you is 20% of your gross pay. So that's 20% of 6 million naira. And 20% of 6 million naira should give you 2 times 6, that's 12. So that's 1,200,000, right? Yeah. So when they give you 1,200,000 naira, because your total allowance, your total personal allowance is 1,400,000 naira. Yeah. So after deducting this your total allowance from this, you now have 4,600,000 naira. So it is this 4,600,000 naira that the state government will tax. It is upon this amount you will pay tax. But let me say something. You can reduce this amount, right? That is, the company you work for can decide to reduce this amount. Okay, let's just assume that you're supposed to pay tax on this amount. You know the tax will be high. Unlike when they help you to reduce this amount to maybe like 2 million naira, the tax will be lower, so you can pay less tax. So how can the company you work for help you to reduce your tax? It is by helping you to contribute out of your salary to a pension scheme. Pension deduction. Let's do that. That is some other allowances that are statutory allowances. You have pension. This is 8%. Okay, 8%. So let's just take 8% of this. So 8% of this should give us 80% to be 4.8 million. So 8% to be 480,000. So you know this one has automatically reduced this. And some companies can help their employees to contribute to the housing fund. So housing fund. NHF. I think this is 2.5%. Yeah, 2.5%. So for the purpose of this video, let us assume that your company does not care about NHF. They don't care about you contributing to any housing fund. So 0. That is, they are not deducting anything for you. Let's also assume that they don't care about NHIS. They don't care about health insurance. So NHIS, or let me just write insurance, 0. So it means that everything that your company could help you save is 480,000, which is pension that most companies do, and they could contribute to your future, to your retirement. This is what the government could allow you, which is 1.4 million out of your gross amount, your gross salary of 6 million. The government could only shield you from 1.4 million, saying that 4.6 million should be taxed. Then your company could only shield you through pension. They could not shield you with housing fund. They could not shield you with insurance. Let's say that's the company you work. So it means the taxable income, what is left, will be 4.6 minus 480,000 naira. So let's do that. 4,600,000 minus 480,000 naira. That is 4,120,000 naira. So this is your taxable income, 4,120,000 naira. It means they are not going to directly tax 6 million. They have reduced it to 4,120,000 naira from the allowances that the state government has given you and from the allowances that your company could help you save, right? That is how I can explain it. So 4,120,000 naira is what they are going to tax. Now, this is where the misconception comes in for most people. Most people that are not accountants think that is a flat rate that is usually applied on these amounts, that maybe it's just 10%, or maybe it's just 7%, or maybe it's just 15% that they will take. No. You do not know your effective tax rates until your monthly tax. You know, this is annual, right? We got annual amounts. So until your monthly tax is calculated, that is when you will know your effective tax rate. So at what rate are you taxed if your taxable income is 4,120,000 naira? Now this is it. On this 4,120,000 naira, they will take 7% on the first 300,000 naira, 11% on the next 300,000 naira. So 600,000 naira has gone, right? 15% on the next 500,000 naira. Then 19% on the next 500,000 naira. 21% on the next 1.6 million naira. And 24% on above 3.2 million naira. So from this 4.12 million, 7% on the first 300,000 naira, right? 21,000 naira. After you've taken this first 300,000 naira from here, what is left? Let's calculate that. You have 3,820,000 left. So the next one will be 11% on the next 300,000 naira, which would be 33,000 naira. So with this, it means you have already deducted 600,000 naira. That is 600,000 naira has already been taxed from this 4,120,000 naira. Now, what is left? What you have left is 3,520,000 naira. That's 3.52. So since you still have something left, you say 15% on the next 500,000. As long as 500,000 naira can still come out of this 3,520,000 naira, you will tax it 500,000. So this is why in Nigeria we actually operate a progressive tax system. That is, the higher you earn, the higher you are taxed. 15% of 500,000 naira will give us, is it 75 now? 75,000 naira. You can see that the tax, this is what you are paying to the government. You are paying all of this to state government. So you can see that the taxes are increasing. Now, the next rate is 19% times. Actually, the way I know these things by heart is that I know it's 4. That is the difference. 4, 4, 4, 4, 4. Yeah. So 19% of the next 500,000 naira. 500,000 naira can still come out of this money. This person is earning big. Like, this person is earning really, really big. So the next 500,000 naira, that will give you 95,000 naira. The next is 21% of the next 1.6 million. So is it possible to take out 1.6 million from what is left? Don't forget that we have taken out 300, we've taken out 300, we've taken out 500, we've taken out 500. It means we've taken out 1.6. Do you understand? So all the taxable income available was 4,120,000, and we have taken out 1,600,000. So you have 2,520,000 naira. So you apply 21% on the next 1.6 million naira. Now, when you take 1.6 million naira out of it, what is left? Let's see. 920,000 naira is what is left. So 21% of 1.6 million, 336,000. Man, the state government is chopping life. They're living large. The next rate will be 24% of anything above 3.2 million naira. But what is left for this guy is just how much? How much have we deducted from this? That's 300 plus 300. 300 plus 300 is 600, 1.6, 3.2. So 3.2 million. So 3.2 million has been taken out of 4,120,000. What is left is 920,000 naira. So you tax 920,000 naira at 24%, and that will give you 220,800. Then you add up all those taxes together to have your total annual tax at 780,800. Then you divide by 12 to get your monthly tax at 65,067 naira. So every month when you receive your annual pay of 500,000 naira, you pay your tax at 65,000. Okay.